Hello everyone, it's time to work on the income statement. One of the things that happens in the budgeting chapter is that sometimes students struggle, not because of the budgeting activity in particular, but because they're rusty or cold on what goes in the income statement, what goes on the balance sheet, what is the cash flow statement. So it's not a bad idea to do a quick review. Here is the classic income statement. Sales minus cost of goods sold equal gross margin. Sometimes it's called gross profit. Then we have operating expenses, also separated typically into selling and administrative expenses. Minus that, you get net operating income. After that, you have non-operating items, which are typically interest expense, could be interest income or gains and losses as well. And then income before taxes, and down to net income. Typically in the second class, in the managerial class, as opposed to the financial class, we usually stop at not net operating income because we're working on managerial type decisions. But the income statement, a formal one, goes all the way down to net income. In this particular project, the only non-operating items we have are interest expense and taxes, which is why they're here. The balance sheet includes your assets, your liabilities, and your equity. So the income statement is all the things that happened during the year, all the transactions with customers, all the resources consumed, paid or not, are in the income statement. And then in the balance sheet are what's left over on the last day of the year. What are the assets owned? What are the liabilities owed? And the difference, which accumulates to the benefit of the owners, is equity. So it's good to have these reviews, and that's part of the wonderful part of this project, of course, is that not only are we walking you through the budget, but it is a forced review of topics from the prior class and also earlier in this course. It's possible to have a contribution margin income statement, which is typically for decisions because it separates out what moves with activity with what doesn't move with activity. But that's actually not a formal external financial statement like the income statement and the balance sheet. So we could budget both. We could budget the contribution margin income statement and the traditional income statement like we have here. But this is what this project wants. Okay, so let's get started. We're going to be linking to prior activity. All right, so sales, it's going to be on our sales tab, and here we want sales in dollars, not in units. The income statement is reported in dollars. All right, let's go over here. Okay, let's go over here. Here we go. There's our total budgeted revenue. We could click on either cell because, of course, they're the same. Cost of goods sold. So that is how many units did you sell times the cost per unit. All right, now we need units sold. So we're going back to our sales budget. Now we want units. And then we know the cost per unit because we calculated that. Remember that? On the finished goods tab. So cost of goods sold is units sold times the cost per unit. And gross margin is sales minus cost of goods sold, and then selling and administrative expenses, paid or not, right? Expenses, resources consumed in completing your activities. So now we need total selling and administrative. So looks like we were lazy and we didn't do the total on these columns. So we'll come back and do that. You could do it for all of it, but we in particular need that line. All right, so let's grab that. Now that we've got a total over there, or we're going to just add the 4 quarters of this. Okay, net operating income is your gross margin minus your operating expenses, your selling and administrative. And then interest expense we calculated on the cash budget. Just 30. Taxes also were reflected on the cash budget. And these can be reported as a positive or a negative. So here, these were minuses, and we can show this as a plus or minus. So that's up to you. You can do it either way. I think I'm going to show it as a plus because that's actually how it's reported on the formal financial statement. I know to subtract it, though, right? So there's your net income. Now let's have a look at the balance sheet. So where is ending cash? We just calculated that, right? In the prior video. Wonderful. Accounts receivable. We also calculated that when we did the difference between sales and collections. So things we had sold but we hadn't yet collected, we made a note of it so be able to put it on our ending balance sheet. All right, raw material inventory. So in our raw material inventory sales budget, we have the units and then we have what it cost for each of those. So we're going to have to do a little calculation here. Let's go on over here. So we have two kinds of materials. So we need the ending units for containers times the cost per container plus the ending units for wax times the cost for wax. Finished goods inventory, same kind of thing. Let's go get how many units are in ending inventory. Going back to the production budget, how many units are at the end of the fourth quarter? 60. What is the cost per unit? Now we have to go over here to our finished goods budget where we got our cost per unit. And those are our total current assets. And then there was no activity in land. Was there land at the beginning balance sheet? Let's go look. Land. Okay, so it's just the same as what it was at the beginning of the year. No change to that. Buildings and equipment, we started out with, let's see, what was it? Buildings and equipment, but we bought $6,000 of equipment. Remember that? That's on our cash flow statement. Let's go pick that up. Cash budget. Let's see, there it is. All right, so our equipment went up by $6,000. How about accumulated depreciation? We had some depreciation, didn't we? But we had a beginning balance. Let's go grab that. So our beginning accumulated depreciation, and we're going to add to that by doing minus. Minus plus minus makes it go up. And we've got to go find our depreciation in our sales and administrative budget. So wow, we didn't total that up. Well, let's fix that. Okay, so back to our budget. So here we go. Get our beginning accumulated depreciation minus, because it's a negative number and we want, if we did plus, it would make accumulated depreciation go down. And of course, with additional depreciation, accumulated depreciation will go up. It accumulates. And then the net of those, property, plant, and equipment, is your $21,000. And so your total assets are the total current plus your plant and equipment net of accumulated depreciation. So now we're going to go get the other side of the balance sheet. And of course, the liabilities plus stockholders' equity amount has to match, right? Has to match, which is why I put in this little check figure. So this check figure has a little formula in it that says, hey, does total assets equal total liabilities plus equity? Or at least that's the formula I would put in there. I would say this minus this. Okay, right now I'm out by 49,519, but of course I'm not finished. But when I'm finished, that needs to be 0, or else I know I've got something going on. So accounts payable, we calculated that when we did materials because that's what we buy on credit. And so we calculated that down here. So several videos ago, which of course you can review what we bought that we hadn't paid for. So that's fourth quarter purchases, the rest of it that we didn't pay for in the fourth quarter. And there was no activity in common stock, so that would be the same as the beginning balance sheet. So let's go look and see what that thing was. Common stock was 10,000. Fine. Now, retained earnings. Big idea from Principles of Financial Accounting. Big idea in this class. Will be a big idea in later classes. So, retained earnings. Beginning, what it was before, plus profits, net income for the year. Let's add that in. Minus any dividends. When you pay dividends out, when you pay dividends to owners, you're returning the profit to them. It's not retained. So where are we gonna find that? It's on our cash budget. You could also go back to the original data, but I know it happens to be there. And then hit enter. So that is your retained earnings. Beginning goes up by net income, down by dividends. So great refresher there. And so my total stockholders' equity is your common stock plus your retained earnings. And so here we go. Let's see. Hopefully. Yay. Okay, so your check figure then is 0 and you know you're in balance. If you're out of balance, you know to start diagnosing and go back. All right. So now I wonder if our model is in good shape. Here's how you can tell. Notice that we have these check figures. Let's see if we agree. Ending cash, was our ending cash $25,240? It was. So our model right now is looking pretty good. All right, let's go back here. Net income, was our net income $23,755? Go look. $23,755. Okay, so you've passed the first hurdle if you've got that. Now, we're going to check and see if you accidentally hard-coded. How are we going to do that? We're going to change one cell over here and then see if you match the new check figures. What is it we're going to change? We're going to increase fourth quarter by 600 units. All right, let's go over here. We're going to go up here to sales. We'll put a little plus in there. And we're going to add 600 units to that cell. That's the only thing we're going to do, because that's the point of having us link all the way back to this data, is that we should be able to change one cell and everything updates. So if everything doesn't update, you know to pick it, because the portion of the grade that's for calculation is all or nothing. Either your model works or it doesn't work. There's no like partial credit. So you want to check it, and this is how you check it. And so if you don't have, when you change that to 1150, if you're not coming up with these two new check figures, something's wrong with your model and you need to fix it and then come back and try again. And that's how you know you're going to be able to get all the points, because the way that this will be graded is one cell will be changed, just like we just did together, and then you have to match the new check figures. Well, let's see if it worked. Ending cash $35,690. And of course, we want to review if there was any change in borrowing. All right, so this still looks fine. The borrowing still keeps us within limits. Here's our ending cash, $35,661. Okay, that's great. 35